Hello, young traders. Doing Shabbat from DRFX, Swing Trading Mentoring. Going to be taking a quick look at the Swiss franc Japanese yen, which could provide us with a trading opportunity within the next 24 to 48 hours. If we actually see the market provide us with a strong signal that would justify entering the market, as this currency pair appears to be forming a consolidation setup on both its daily chart as well as on its 4-hour chart. Now, everything or most things that I do in terms of my analysis and trading is done within the context of consolidation setups. So whether the market has already completed the formation of consolidation with clearly defined resistance and support boundaries, or whether it's in the early stages of forming these consolidations and we're trading these waves, we will trade these setups so long as the signals provided by the daily chart and the 4-hour chart are strong enough to justify trading these bullish and bearish waves. Of course, everything is done within the context of the daily chart and the 4-hour chart. Market direction is identified within the context of these consolidation setups, determining whether or not the market is going to be moving bearish or bullish based on the signals provided. Once a trading opportunity has been identified, entry then takes place using the signals and patterns provided by the 4-hour chart, with the stop loss area on this time frame also used to protect the trade. Trading gains of between 50 and 70 pips within 24 hours is the main objective, using these signals on the daily chart and the 4-hour chart. Where justified, trading gains of less than 50 pips and up to 100 pips are also targeted. This is a setup so far on the Swiss franc Japanese yen. Market has pulled back following this uptrend, and what we can see and what is possible usually when the market has ended a particular trend direction is that it could actually start to move sideways and eventually form a consolidation setup. So what we would need here is for the market to provide us with a bullish signal that would start this movement and indicate a possible start of a long period of sideways movement that eventually leads to the formation of a consolidation. Now, on the 4-hour chart, you can see that this pullback that has taken place has led to the formation of this downtrend line. And so the break of this downtrend line is going to be the first objective that would need to be achieved in order to start the uptrend. So going to be monitoring the market for these bullish signals as it breaks above this downtrend line and look for trading opportunities to take advantage of this possible bullish movement. So like most of the other currency pairs on the market, this one looks as if it's forming a consolidation setup on its daily chart and 4-hour chart. 4-hour chart downtrend is still holding, and so we're going to have to be patient and wait until the market breaks this downtrend line and enter the market when the market has both broken that downtrend line and has provided us with a strong bullish signal on the daily chart. Target is going to be between 50 and 70 pips for the most part in terms of these types of trading setups. And if possible, we would also target between 30 to 50 pips if more than 50 pips is not possible. So I'm going to be monitoring this trade, and of course the best approach to take advantage of these setups is to ensure that we have identified the resistance and support areas as well as trend lines that have been formed along the way in order to ensure that we have accurately identified the setup that we're analyzing. Once entry takes place, we're going to be using a strong stop loss area in a 4-hour chart to protect the trade. And depending on the target, we're going to be holding the trade for between 1 day and 48 hours until the trading target has been hit. And of course, as soon as we enter the market, we will not monitor the market any at all and only check on the trade after the trade has been closed. So I'm going to be monitoring this currency pair and waiting until the market provides us with the right type of signal, and then entering the market as soon as this signal has been given, and of course after we have identified a strong stop loss area that will allow us to stay in the trade until the trading target has been hit.